Ladies and gentlemen, what actually happens if you just stop paying your mortgage? Does the bank take your house? How long do you have? Can you actually fight it? And if you do lose your home, can you get any of your money back? Let's find out. Let's start with your first missed payment. Your mortgage payment is due and you don't pay it. Most mortgages have a grace period, commonly around 15 days. After that, depending on your loan, you may get hit with a late fee, but nobody's taking your house. Now we get to 30 days. Once you're 30 days delinquent, things start getting more serious. Your servicer may report the missed payment to the credit bureaus, which can hurt your credit. And here's something a lot of people don't know. By around 36 days delinquent, your mortgage servicer generally has to make a good faith effort to establish live contact with you. Basically, they have to actually get a hold of you and talk about what's going on and what options might be available. Then by around 45 days delinquent, they generally have to provide you with written information about available loss mitigation options. That can include things like repayment plans, loan modifications, or forbearance. A forbearance basically means your lender temporarily pauses or reduces your mortgage payments because you're going through a financial hardship. But that doesn't mean the payments disappear. You still owe the money. It just gives you some breathing room and a plan for dealing with those missed payments later. And there are situations that could potentially slow this process down. Maybe you lost your job, went through a divorce, became seriously ill, or had another major financial hardship. Those things don't automatically stop a foreclosure, but they may qualify you for options like a forbearance, repayment plan, or loan modification that could help you avoid foreclosure altogether. Now let's say none of those options work out and you continue missing payments. Once you hit 60 days delinquent, things are getting much more serious. At this point, you've missed multiple payments and you're falling further behind. But what happens if you make one payment when you owe two? Does that restart the clock? No. Let's say your mortgage is $3,000 a month. You missed January, you missed February, now you owe $6,000. You send the servicer $3,000, you've reduced what you owe, but you haven't necessarily brought your mortgage current. And when March comes around, another payment is due. So you can't just make one random payment every couple of months and assume you've magically restarted the foreclosure clock. You're still delinquent. Now we hit 90 days. At this point, you're seriously behind. Your credit has probably taken a beating, you've been hearing from your mortgage servicer, and now you're getting dangerously close to the big number, 120 days. For most mortgages covered by federal servicing rules, the servicer generally cannot make the first foreclosure filing till you're more than 120 days delinquent. But once you cross that point, foreclosure can become very real. And this is where you live matters. There are two basic types of foreclosure processes in the United States, judicial and non-judicial. I'm in Florida, and Florida is a judicial foreclosure state. That means the lender generally has to go through the court system to foreclose on your home. They file a foreclosure lawsuit. You get served. You have an opportunity to respond. And if the lender proves its case and ultimately gets a foreclosure judgment, the property can be ordered to a foreclosure sale. In a non-judicial foreclosure state, the lender may be able to foreclose without first filing a lawsuit and getting a foreclosure judgment. There are still rules, notices, and procedures they have to follow. It just doesn't necessarily require the same court process. Now, another Florida question. What if you have a homestead on your house? Florida homestead protections are extremely strong, but they do not mean you can stop paying your mortgage and keep the house. Your mortgage is secured by the property. So you can't just tell the bank, sorry, I ain't paying. I got a homestead. Now, what happens to the money you already have in the house? Let's say you owe $300,000 on your mortgage, but the house is worth $600,000. The bank doesn't automatically just get to keep all of that equity because you were foreclosed on. If the property is sold through foreclosure for more than what's needed to satisfy the foreclosure judgment and other amounts legally entitled to payment, there can be surplus proceeds. And depending on other liens or claims against the property, you as the former homeowner may ultimately be entitled to some of that surplus. So no, foreclosure doesn't automatically mean every dollar of equity you built in the home just disappears. but I definitely wouldn't recommend foreclosure as your strategy for getting your equity out of your house. Because remember, while you haven't been paying, interest has been adding up. You can also have late fees, attorney fees, court costs, and other foreclosure related expenses added to what's owed. And all of that can eat into your equity you otherwise could have walked away with. So if you have equity and you know you can't afford the mortgage anymore, selling the house before it gets to foreclosure is generally a much better option than just letting the foreclosure process play out. Now, can you actually fight a foreclosure? Yes, there can be legitimate defenses. Maybe the lender can't prove it has the legal right to enforce the mortgage. Maybe payments were applied incorrectly. Maybe required procedures weren't followed. Or maybe there's another legitimate legal issue with the foreclosure. So yes, it is possible to successfully challenge a foreclosure, but there seems to be this idea that if you beat the bank, suddenly your mortgage disappears and you get a free house. That's not how it works. Even if a particular foreclosure action is defeated or dismissed, that does not necessarily erase the underlying mortgage debt. Depending on what happened, the lender may be able to correct the problem and pursue its rights again. So let's say you fight the foreclosure and you win. Congratulations, you can continue making your mortgage payments.